Oh my. Man, that was insane day today. I'm going to cover the sectors, guys. We're going to detail the S&P sectors. I'm going to take a look at that, see what the price action did today to the formations. Is it simple pullback? Is it are we above breakdown lines that we have been looking at, signaling the stage 4 decline? So let's go do it, guys. With the biggest gainer of the day, consumer discretionary. Look at that, creating that wick. Those buyers coming in. That month, we're all the way down here. And buyers came back. Still below the monthly defined breakdown line, which is here. Trying to work its way up. I don't know if it's going to do it in the next few days of trading left in December. If it does, then that is a push. That means that monthly defined breakdown with that measure move all the way down here is going to have it won't be measured move. It won't be valid right now. You really need to close below that 800 level to have that measure move all the way down here to 660, guys. If we do close below, then you have that wick. I'm not a big fan of it. We just have to see where it closes below. Then after that, that's when you zoom in on the weekly. And you check out the 30-week average going downwards. Your price action is below. You had some consolidation here. You broke down, confirmed on the weekly trend last week. We had a confirmed close below the Ichimoku cloud, below that breakdown line. And right now it looks like it's just a pullback on the weekly. Going to hit that monthly defined support, now turn resistance, and then go down. So we'll have to see the next the next few days in this week, see where this candle closes, and see if we ever get a red candle after that to signal that the pullback is complete and we're on our way back down, and that monthly defined support has held. Turn resistance. All right. Woo, discretionary, man, on fire. Okay, let's go on the monthly for the energy sector. Another big gainer. Okay, this one had broken down and confirmed in the previous month. And it's reached its target during this month. What did we run into? Are we running into monthly defined support? I think so, right here. We're running into monthly defined support. You see the price action right above it. You sink through that monthly defined support, and the price action getting sucked back up, just not ready to have that top bigger formation from that top pattern that had implied measure move that reached its target. If we had to close below that 12-month moving average, then we have that crazy target. Going to bring us down all the way back down here, which might run into some support right here, the 325 level. So the market's not quite ready to give you that measure move, but the month is not over yet. But it seems to want to close above that. It's going to need more time, more tests of that level to break down. You see, as this is the wick on that monthly defined support, noise, those long candles, those hammer candles. Oh no, buyers say you're exaggerating. Sellers, price action back up. This could be happening right here. So the price action right now could actually go back in within the range, test that monthly defined support, turn resistance, and then after that maybe go and give another try at that breakdown, that bigger pattern, monthly defined breakdown line, guys. Still underperforming the SPX, still in a stage 4 decline, below the Ichimoku cloud. So whenever you see that, oh, there's a rally, something going up, well, the trend is still visibly downwards. So now this is the beginning of, I always say, maybe there's a pullback that's going to come up to a support and resistance, and that's what we're going to look at. So when the price action goes back up and the Mansfield starts re-declining against the SPX around here, around 30-week average, this is another good risk to reward short entry, guys, right here. So discretionary, still same thing. 30-week average still going downwards. This would be a good shorting opportunity right here if we get close to there. Energy, same thing. Okay, information, 6%. Bam. Okay, monthly, I have a breakdown line here. I had another one right down here. Oh, duplicate. So this one, we're really below this top formation here. I'm not sure if we're going to go, if it's going to close above in the next few days, that December close. So that one's pretty safe that we have this target here. But it's running into another level of support right here, monthly defined support. I don't know, again, let's see if it closes above that. If it does, then we don't have that bigger implied measure move. Let me add that crazier arrow. Remember, bigger patterns, targets, price action, move down, bigger patterns, and that we're not going to get this crazy target right here if we close above the 1100 level. And if it closes below the 1136 level, then we do have this measure move that bring us down to 950. Still below 12-month moving average, still in the downtrend. That's the big picture. 30 moving average going downwards. Last week confirmed break below the Ichimoku cloud, below that monthly defined support on the weekly chart. That's stage 4 decline. So what do we have here? Is this going to be a pullback? Going to test that support and resistance here. If it maybe a little higher, if it pierces through, let the 3-week average catch up, and that's a great opportunity to short right here. Continuation short, guys. Pullbacks. You never go in a straight line, guys, to the target. Monthly. Okay, communication services. Lots of noise. Below that breakdown line. Still way below. I don't know if it's going to go back above. If it doesn't, I have an applied measure move. But this is very volatile sector. Let's go zoom in the weekly, see if we get less noise. Stage 4, starting to outperform the SPX. Monthly defined, is this another pullback? Same situation. Pullback to monthly defined support and resistance. Another opportunity to continuation short right there. Materials. Monthly confirmed breakdown materials back in October, guys. Pull back on the monthly, then continuation down again. And you see I sorted these. So all the biggest of the gains, SPX, we saw discretionaries, energy, information technology, telecommunications, and now it's starting to taper off. So materials, less strong, had that pullback going down, hitting some previous resistance turn, resistance turn support here, what I call a wall. Let's see on the hitting that support right here, previous resistance turn support. Had that pullback, had a great opportunity to continuation short here, and now from this sideways move right here, the pullback could hit that. I don't know if it's going to pierce through. If it does, maybe this level here, let the 3-week average catch up and continue short. Lower highs, lower highs, lower highs, lower highs. As long as the premise and all the weight of evidence of stage 4 is still there, this is part of the natural process of a decline. You get fear and panic and get those big red candles, but eventually, if that's absent, sometimes you get some levitation and you get back to go to test previous support and alternate resistance, guys. Okay, industrials. Did you hit an important? Oh, same thing here. Seem to be hitting this 2016, guys. These breakout levels in 2016, previous resistance turn support, below 12-month moving average. Already had its confirmed breakdown in October, pulled back above that level, gapped up, hit the 12-month moving average, did not make it out, and then timbered. So I could see here on the weekly, Could have a pullback right here. 30 average, like catch back up, and then go down. Test here, maybe pierce a little higher and hit that monthly defined support, turn resistance. Again, as long as you're below 3 average, you keep doing lower highs, lower highs, lower highs, you're still in a downtrend. Remember, don't short if you're starting to gain on the SPX. You want to make sure you resume your underperforming of the SPX. Financials, monthly. What are you running into, guys? Oh, so natural support, sunk through previous resistance, turn support, but now in the monthly you're hitting that natural support to create that bigger pattern. Eventually that will give you a further away target. Going to bring you down to the 2016 lows, guys. What does that look like on the weekly? That's been confirmed stage 4 for a while. Let me put right here. Even had a sideways move. Same thing again. Hitting that support, monthly defined support, pull back to this area here, previous support and resistance, or maybe a little higher to that monthly defined support. Turn resistance, and then maybe go check it down. Good risk reward entry right here. Lower highs, downtrend. Healthcare monthly. I know, guys, bear with me. It's a long one, but it's good to see the underlyings of the health of the S&P, guys. Even if you saw the S&P big rally, you have to take a step back and see the components, how they are behaving. Refresh your look. Make sure you haven't done any mistakes in analysis. Reevaluate. And if the chart has added candles and it morphs and it says, hey, Pat, I think you might have been biased. Something was wrong. Always recheck when you have a chance. There's nothing wrong with that. So healthcare, actually one of the stronger ones. Just this month had some price action below 12-month moving average, pulling back up, hitting that monthly defined support. Starting to trace out. We're starting to get a picture of what would be the next measure move, and it closed below that level right here, 938, 940, bring us back to 2015, 16, 17 lows right here. How does that look like on the weekly? Well, you see, that's one of the better sectors, still outperforming the SPX. 30 average still flat, going upwards. So you're going to need more price action below. You're below the Ichimoku cloud, hitting that support. So we have to see if you go back above. That one seems one of the stronger sectors. Could actually go and test. If I want to fetch where some support, weekly defined support, turn resistance, could maybe have a pullback here, then a retest, and then maybe down. That would give us lower highs. So that's one of the stronger of the sectors for the SPX. Real estate. Ooh, okay, let's look at this crazy candle. Was a little bit below that 12-month, below that monthly defined support. No, price action up, above. It's not time for you to break down. The market wants more time for it to decide its next move. Still below 12-month moving average. Going to start keep dragging that downwards. What are we dealing with on the weekly? So here's some weekly defined support. Still some big red candles here. That's a crazy hammer candle. That's really trying to signal. If it closes the week like that, it's going to signal you that it's going to make another run to go test, go above, test the support, turn resistance, and maybe even go a little higher, test that 30-week average before giving another try, before going down below that monthly defined breakdown line. Ooh. Consumer staples. Again, wow, that's another one. Back above monthly defined support. Still at price action below 30-week average. Lower highs on the monthly still. But it's telling you not quite ready yet to do a total meltdown. To have that crazy measured move downwards. Hey. below 30 average. That needle again, that hammer wants to get nailed up. Below the Ichimoku cloud, below 30 average. But this one seems to want to pull back and give another go at that weekly defined support and resistance before breaking down, guys. Utilities monthly. What does that look like? Ooh, above the 12-month moving average. That is probably the stronger of the sectors. Some price action below it, but decide to go back up. Didn't quite suck up as the other ones. So let's see on the weekly what that gives. Outperforming the SPX. Price action below 30 average, but barely. Price action starting to go back up. So that one is still in it's not stage 2, but not in stage 4. It seems to be in the stage 3. So we have one of the sectors in the SPX behaving a little bit better than the other one, guys. So you're still in the stage 3 here. Wow. Okay, so that's it. That's a total recap for the sectors. Keep an eye on those. You see how the weight of them, some are deep already in stage 4s, and they're going to have opportunity for pullbacks. Some of them still being rather defensive and not going too deep in stage 4 territories. And it's weird because the ones that aren't in stage 4 territories are the ones that had the least gains today, guys. It's like a catch-up game happening. All right, that's it. Let you go, guys. Thanks for watching. Ciao.